All right. Good morning, everybody. Good morning and happy Tuesday, everybody. Today's November 7th, 2023. Top story this morning. Well, we got two big stories that I spotted this morning. First, we got import and export data from China, the China balance of trade. And there were some surprises in there. We had China exports fell by 6.4%, slightly more than expected, slightly more than last month. Not really news, though, because China's exports have been falling for the better part of this year as global economic trade has been slowing. People are just ordering less stuff. But something that was kind of surprising was China's imports increased by 3%. Now, if China is making less stuff and selling less stuff, then why are they buying more? And the problem is where you look. Where is the stuff, or what is the stuff that they're buying? China saw massive increases in their purchases of oil, in their purchases of coal, and in their purchases of food commodities. China is stockpiling commodities, and they're doing this at a time when trade is slowing. And where is their trade slowing? Both imports and exports saw their biggest declines among four particular countries when it comes from China. The US, of course, but also South Korea, Japan, and Taiwan. In other words, the first island chain, which if you follow geopolitics and the military buildup in the South China Sea, those are the countries that basically have China surrounded, the whole first island chain. And those are the countries that would be directly involved in any potential conflict over Taiwan. So when you look at what's going on in China's trade, not only do you get a story of slowing global trade, slowing economic activity, but you can also see this march to war going on within the trade data. They're stockpiling food and energy. Why? Because if there is a conflict over Taiwan, the U.S. would probably blockade the Malacca Strait, which would prevent any food or energy from getting into China. And so they're stockpiling food and energy at a time when we're dumping our energy, or at least we dumped our energy reserves last year, half of them, in fact. What a colossal blunder that was. Well, we had to get those poll numbers up. And then you can see the countries that they're actually slowing the trade with. It would be the countries that they would actually be fighting with. This march backward, the big joke is how did Germany invade Poland? They walked in backwards and said they were leaving. Well, it seems like that's how we're going into World War III. We're talking about peace and we're talking about how, we don't want to have war. But everything we do, all the economic data says we are on this one-way crash course towards a military conflict in the South China Sea. You can see it in the trade data. Elsewhere, what is going on in the mortgage market? There's a lot of news around mortgages lately. I don't know if these stories are all related or not. One of them, I'm not sure if it even happened or not, but something is up in mortgages. First of all, we had Mr. Cooper, one of the largest loan servicers in the country, something like 4 million mortgages that they service. Mr. Cooper was hacked about a week ago. We're just finding out about it over this last day or so, that it was basically a ransomware attack. Some bad actor got into their system. And so it looks like what Mr. Cooper did is they just cut off the leg, if you will. They just isolated the system. So nobody whose loan is serviced by Mr. Cooper has been able to pay their mortgage. And Mr. Cooper is assuring customers that their data is safe and that, don't worry, you won't rack up any fees or penalties. But you've got something like 4 million people in the country who can't pay their mortgage right now because of a cyber attack. There's a lot of very important financial infrastructure that's been very glitchy lately. And it just feels like we're not getting all the information here. All right, that's one thing going on in mortgages, the Mr. Cooper hack. Also, you've got yesterday, the DTCC, or the Depository Trust Clearing Corporation, announced that they are increasing margin requirements associated with mortgage-backed securities, which is financial long speak for if you want to borrow money against your mortgage-backed securities as collateral, you can't borrow as much. You need to post additional collateral to borrow the same amount of money. Now, that in and of itself is not terrible news, but I would add that was one of the precursors to the collapse of Lehman Brothers during the global financial crisis, when all of a sudden the banks didn't want to accept mortgage-backed securities as collateral anymore. They started raising those margin requirements. So that's a bad indicator that something might be up in the mortgage market. There's this report from January about mortgage occupancy fraud. that started circulating on Twitter. It's getting all kinds of visibility on Twitter now. All these big accounts are retweeting it. Now, this report was released in January. It's not a new report, but it talks about how mortgage occupancy fraud, people who are taking out loans to buy houses, claiming that they're going to live in that house, when really what they're doing is renting the house out. That's fraud. And most people who get convicted of that end up doing something like 22 months in prison. So it's a serious fraud. And it's apparently much more widespread than people realize. And I can't help but think of all those Airbnbs, all those Verbos, and all those short-term rental bans going on across the country. There's going to be a lot of people who took out mortgage claiming they were for their primary residence, but really they were just Airbnb in that thing. And that could mean a wave of mortgage foreclosures on the horizon. And last but not least, there is a rumor, and I want to emphasize this rumor going around on Twitter, that a large U.S. mortgage lender was just raided by the FBI. Right. Now, I have tried like heck since last night and this morning to figure out who it was. Did it even happen? Is it true? There's nothing concrete out there, but a lot of people, this thing is swirling on Twitter. Everybody is talking about this, speculating who it might be. I'm not going to speculate who it might be. I'm not even going to speculate on whether it happened or not. But all this stuff taken in context, the hack at Mr. Cooper, the DTCC jacking up margin requirements, the rumors of a raid at a mortgage lender, and all of a sudden this previous white paper published by the Federal Reserve about occupancy fraud, all happening within a very short window of each other. Something's going on in the mortgage market. All right, so keep your eye on what's going on over there. And with that, we are going to shrink my big melon of a head, and let's see what's going on in the world of finance today. Don't forget that big like button, guys. It really helps out with the YouTube algorithm. And if you're new to the channel, hit that subscribe button. And we do this every morning. Have your coffee with the melon heads as we go through the markets. CNN Fear Greed Index is sitting at 42, almost back in the neutral territory. It was down in extreme fear just a few days ago. It's been steadily rising as this market has been rallying. Right now, the S&P 500 is down 3 points ahead of the opening bell, essentially flat, unchanged on the day. Now, let's take a look at the S&P 500. This is a longer-term chart going back to about the middle of July. Just want to show you guys here, we had this big run-up last week. We recaptured the 50-day moving average, and check out what happened yesterday. Now, we came down a little bit yesterday, and we just barely touched that 50-day moving average and then bounced hard off of it, ended up closing the day up just modestly. But that's a pretty bullish technical indicator right there to see us break above the 50-day moving average and then retest it like that and bounce off it with a pretty good bounce. So even though the S&P is set to open down a little bit right now, the technicals are looking pretty good on this one at the moment. Although I would add 1, 2, 3, 4, 5, 6, 7 green candles in a row. I'm sorry, 6 green candles in a row. Nothing goes up forever. So it's due for a pullback. But it was interesting to see that bounce off the 50 line. The U.S. Dow, or the 30 cash, this is the Dow Jones Industrial Average, set to open down about 66 points or 0.2% to the downside ahead of the opening bell. And the NASDAQ is in the green this morning, up about 20 points or 0.14 higher ahead of the opening. So we got a mixed bag in stocks today. NASDAQ up, Dow and the S&P down. Looking over at the commodities board, there's a lot of red in commodities today. Gold down $16.50 for December gold futures, trading at 1972. That's down about 0.84% this morning. December silver futures getting crushed, trading at 22.65. That's down 58 cents this morning, 2.5% lower on silver. So Mr. Slammy is in control of the precious metals this morning. But everything is down this morning on the commodities board. We got platinum's down 1.75%. Palladium's down almost 4%. West Texas Intermediate down 2.2%, $1.76 lower for December WTI futures, trading at $79, back below 80. Now looking over at the DXY, we got a sharply higher dollar this morning, up about 45 basis points, trading at 105.66. That's the dollar strengthening against the euro and the yen this morning. And looking over at the bond market, something of a mixed bag here this morning. We got the long end is lower, the short end is a little bit higher to flat. The 30-year Treasury is down 5.8 basis points. 4.77% on the 30-year. The 10-year is yielding 4.62. That's down almost 5 basis points this morning. The 2-year at 4.949. That's actually almost up 1 point. And the 1 month trading at 5.397. So looking over at the chart of the 10-year Treasury, again, that 50-day moving average, it looks like 3 days in a row here, this has held So when I see the 50 holding 3 days in a row, that tells me we're probably due to get a little bit of a bounce soon. And also that this uptrend that we have been in since pretty much the end of May, that may still be intact. I know everybody is saying, okay, the Fed's about to pivot any day now, so yields are heading lower. Remember, guys, lower yields requires buyers. We need a lot of people to come in and buy these bonds in order to get those lower yields. And I'm still not quite sure who those buyers are going to be. Okay, yeah, maybe Bill Ackman. But besides Bill Ackman, who nobody should pay attention to, who else is going to buy all of those 10-year treasuries with an ever-increasing supply? Janet Yellen is going to issue a whole lot of those. All right, now let's talk about the big story. China's import surprise offers hope as recovery risks linger. And I will take awful Bloomberg headlines for 1,000, Alex, because this is just about the worst headline I've ever seen. I looked at that China import and export data this morning, and I can tell you hope is about the last thing that came to my mind when I started looking at that data. Imports increased 3%, bucking the forecast for a decline, but exports were worse than expected as the drop adds mixed signals. You can always bank on a rosy headline from Bloomberg. No matter what happens, strong and resilient is the narrative. China's trade data for October offered a mixed picture for the economy's outlook as an unexpected pickup in imports was offset by signs that global demand for Chinese goods is struggling to gain traction. Imports rose 3% from a year earlier last month, the first gain in 8 months, and bucking the consensus forecast for a drop. Overseas shipments dropped 6.4%, worse than expectations. The resulting trade surplus was $56.5 billion. So, modest increase in imports, 3%. Big drop in exports, 6.4%. China's still operating at a surplus. But as always, you usually get some good information in the last paragraph on a Bloomberg article. And sure enough, today we got that. The volume of China's crude oil imports climbed by 14.4% in the first 10 months of the year from a year ago, while that of coal surged 66.8%, according to customs data. So China is stockpiling energy. That's scary. All right. China imports a lot of their energy, but the fact that they're stockpiling their energy, why would China be stockpiling their energy? Well, let's take a look at some of the data and see if it offers some hints. This is the actual import data. Imports into China unexpectedly rose 3% year on year to $218 billion. This was the first growth in purchases since February, following efforts from Beijing to stimulate domestic demand and signs of stockpiling. Now, look at what they stockpiled. Purchases increased for crude oil, 13.5%, refined products, 63.2%, natural gas, 15.5%, copper, 24%, copper ore and concentrates, 24%, soybeans, 24%, edible oils, 28%. They are stockpiling food and energy like crazy. Now, look at where the purchases expanded and where they contracted. Purchases expanded from the EU, Australia, and ASEAN, I think that's oceanic countries. But they declined from the US, Japan, South Korea, and Taiwan. China's buying less stuff from the first island chain, all the countries that would be considered adversaries if it came down to a war over Taiwan. China's buying less stuff from. And you see the same thing in the export data. First of all, exports dropped 6.4% year over year. That is slowing demand for Chinese goods. But where did the exports slow from? Exports decreased to the U.S. by 8.2%, from Japan by 13%, South Korea by 17%, and Taiwan by 4.4%. Big declines in all of the first island chain countries. Guys, you can see it in the trade data. This economic divorce from China that the U.S. in particular has been undergoing, really going back to the Trump days, it's getting worse. They're stockpiling energy as all this belligerence around the world expands. We've got a two-front proxy war going on in the Middle East and in Ukraine, and things are just getting worse between the U.S. and China. There's still time to switch it off, guys. It doesn't have to happen, but it just seems like we are on autopilot, just on this crash course towards a confrontation with China. Moving on, let's talk about what's going on in the mortgage market, because this one is a big story and surprisingly little coverage of it. Mr. Cooper suffers a cybersecurity incident and locks down systems. Cybersecurity incident, that's a funny way of saying they got hacked, but, people are calmer. They don't panic as much and, strong and resilient and well-capitalized, all that stuff. If you call it an incident, it doesn't make people as scared. Investigation is ongoing. The company assures customers that no penalties or fees will be incurred. Mr. Cooper was the target of a cybersecurity breach earlier last week, leaving the mortgage industry giant's systems locked down for days while it worked on a resolution. Originally described by the company as an outage in messages sent to customers, the October 31st incident has yet to be termed a cyber attack in official Mr. Cooper verbiage, although it acknowledged in a filing with the U.S. SEC that an unauthorized party gained access to certain technology systems. In other words, they got hacked. The company posted a notice on its website of the incident announcing that it immediately initiated response protocols, deploying containment measures to protect customer data, and shutting down certain systems as a precautionary action. Law enforcement was notified, and an investigation with assistance from leading cybersecurity experts was launched. As of November 5th, the notice remained online, pledging that Mr. Cooper is at work keeping customers' sensitive information secure. Any customers who are affected, they'll be notified and provided with identity protection services provided by Mr. Cooper. Mr. Cooper is not able to process payments while its systems remain down. Per the company, electronic payments for loans will process as soon as systems return to standard operations. Rest assured, you will not incur any fees, penalties, or negative credit reporting related to late payments as we work to fix this issue, the notice said. So that is one of the biggest mortgage servicers in the country. People can't pay their mortgage because they got hacked. And then we got this one, just came out yesterday, November 6th, the DTCC, that's the Depository Trust Clearing Corporation. These guys kind of run the plumbing of the financial system. They handle large trades between banks and intermediaries. I'm not going to get into the specifics of this because there's a lot of language and a lot of terms you're probably not familiar with. But this notice is basically saying, given the ongoing volatility in fixed income markets, in other words, because the bond market has been crashing, effective November 20th, 2023, they are increasing the margin requirements for mortgage-backed securities, which means you can't borrow as much money against MBS as you used to. They're raising the margin requirements. You have to post more collateral to borrow money if you're using mortgage-backed securities or bonds composed of mortgage as your collateral. And look, this in a vacuum is no reason to panic, no reason to freak out. This kind of thing happens sometimes. But this was one of the things that happened right before Lehman Brothers collapsed, because Lehman Brothers was using mostly mortgage-backed securities as collateral to borrow cash that they needed. And then all of a sudden, nobody would accept mortgage-backed securities as collateral. Lehman Brothers didn't have any cash, and they collapsed. So this is worth keeping an eye on, guys, because we've got these interest rates keep marching higher. We've got stress in the banking system already. We have a dollar shortage developing around the world. We've got Mr. Cooper. People can't pay their mortgages. And now we've got the DTCC saying we don't want to lend against MBS quite as much as we used to. So that's worth keeping an eye on. And then all of a sudden, this one, I've seen this report going on a lot. Darth Powell on Twitter retweeted this, and it's getting a lot of exposure. A lot of people are talking about it. Now, I just want to add that this white paper from the Philadelphia Reserve Bank, Philadelphia Fed, this was published in January. So this is not new news, but this is getting a lot of attention all of a sudden. Owner occupancy fraud and mortgage performance. This is from the Philadelphia Fed. We identified occupancy fraud, borrowers who misrepresent their occupancy status as owner occupants rather than investors in residential mortgage originations. Unlike previous work, we show that fraud was prevalent in originations not just during the housing bubble, but also persists through more recent times. We also demonstrate that fraud is broad-based and appears in government-sponsored enterprise and bank portfolio loans, not just in private securitization. These fraudulent borrowers make up 1/3 of effective investor populations. Occupancy fraud allows riskier borrowers to obtain credit at lower rates. These fraudulent borrowers perform substantially worse than similar declared investors, defaulting at a 75% higher rate. So people who falsely claim that they're going to live in a property to get a mortgage just so they can rent it out, they default at almost double the rate of the average borrower. Their defaults are also likelier to be strategic, suggesting that they pose a risk in the face of declining house prices. There's a lot of people out there who took out mortgages. They lied when they took them out. And these are people who will walk away from the loans the second those properties stop cash flowing. And there's a lot of properties that are about to stop cash flowing. See also that video I did with my buddy Travis over at Real Estate Mindset about how many short-term rentals there are in markets like New York and Phoenix and Las Vegas. In these markets, there are more short-term rentals that are now illegal than there are houses for sale or for rent combined in the entire market. So So there's a lot of properties that are about to stop cash flowing, and these are borrowers on those properties who are prone to just walk away. New purchase mortgage applications will be owner occupants of the property, but do not move from their old address and consequently hold multiple first liens as recorded in the credit bureau. We argue that fraudulent purchasers that we identify are very likely to be investors. And let me see, accounting for that fraud increases the size of the effective investor population by nearly 50%. This is not just a little thing, guys. This is widespread. People are doing this all over the country, and they are more likely to default during hard times, which you could argue are just around the corner. And let's talk about this one. Surprising nobody, WeWork officially goes bankrupt and signs a pact with creditors to cut their debt. No big surprise here. WeWork filed for bankruptcy, capping a tumultuous period that saw the once high-flying startup navigate a failed initial public offering, COVID-19 lockdowns, a blank check merger, and slow-to-return office trends. The company, which at its 2019 peak commanded a $47 billion valuation, listed $19 billion in liabilities and $15 billion in assets in their bankruptcy petition in New Jersey on Monday. So they went from a $47 billion company to a negative $4 billion company in just 4 years. The Chapter 11 filing allows WeWork to continue operating while working out creditor payment terms. WeWork entered bankruptcy after reaching a tentative restructuring deal with longtime backer SoftBank and existing creditors to slash over $3 billion of debt and wipe out most of its shares. It's also seeking to reject more than 60 leases across North America and will use the court process to renegotiate other contracts, the CEO said. So this company, they're going to keep operating. They're not disappearing. They're allowed to continue doing business. They're restructuring. They're going to wipe out a lot of their debt. There's going to be a lot of square footage that they're currently renting that's going to hit the market. This is going to further depress commercial real estate prices. This is another domino in the commercial real estate collapse. I don't want to say domino in a bubble. That metaphor doesn't really hold water. But this is the commercial real estate bubble popping, guys. Basically, WeWork was just a real estate investment trust, and they arbitraged the difference between long-term rental prices and short-term rental prices. It was never that strong of a business model. Why they got a $46 billion valuation is amazing to me. It just goes to show you during times of easy money, people will just lob money at anything. So this is a big deal, and keep your eye on that commercial real estate bubble, guys. It is a painstakingly slow collapse, but we're all watching it happen in real time. And also, let's talk a little bit about the layoff stories, guys, because they're starting to trickle in again. Starting to see a surge in the anecdotes about layoffs. Jack Dorsey's payment company Block to slash headcount by as much as 10%. This one just hit the tape yesterday. Block has about 13,000 employees. So if they're cutting by 10%, there's about 1,300 people out of work. Again, white-collar people getting laid off. You blue-collar guys appear to be safe. It's the white-collar guys who are taking it on the chin in this recession, which apparently it's not a recession, soft landing, the tree in the nest. Yeah, okay. And also Pfizer laying off 781 workers in New Jersey. The job cuts are tied to pharmaceutical giants' operations in Somerset County. So you got a few hundred more layoffs from Pfizer there. There's also stories about accounting firms laying people off, more pharmaceutical companies laying people off, more tech and data analytics firms are laying people off. The story about the job cuts, guys, it's starting to come back, and we just saw that unemployment rate tick up in the last jobs report, so keep an eye on that one. And I just want to say I saw somebody come up in there before. Where were you? I guess it didn't. Oh, I saw something. Anyways, guys, that's about all I got for you today. So, again, I want to say thank you very much to all my Patreon supporters for everything you guys do for the channel. Appreciate that very much. Looking forward to talking to you guys at 6 p.m. tomorrow for our weekly Zoom call. Link down below should you feel so inclined. Also, hi, Mom. Hi, Dad. I love you guys. Until next time, live small and dream big.